Hey, everybody, welcome back to Intentional Money Moves Live. I am so glad that you're here with me today because we're going to talk about the elephant in the room today. And that is something that is on a lot of people's minds, of course, and that is the wild ride we've been on with the stock market over the last couple of weeks. So, if you've opened your investment accounts and you have felt some stress, maybe your stomach dropped a little bit, first of all, I see you. I have been in a lot of conversations with clients, with women in our community. And I want to start by saying this. If you're feeling a little stressed, you're feeling that anxiety, that's completely normal. And it does not mean that you did anything wrong. It does not mean that something is broken. It means that you're human and that you care about your financial future, right? But here's also what I want you to know. How you respond in moments like this is what matters more than the actual market movement itself. Let me turn on the chat here real quick. Hold on. Make sure you guys give opportunity to ask any questions and say hello when you arrive. But that's what we're going to talk about today. And I want to walk you through the intentional money method, which is the 6-pillar framework that I share in the book that I published last week. Actually, I have a copy here. You haven't seen it yet. This is the book that just came out, and we're going to talk about the 6 pillars that I share in the book and how you can really use that to really the 6 pillars you can use to apply any area of your life. Yesterday in the Empowered Sisterhood, we did a masterclass on kind of like beyond the book, how do we really take this framework and apply it to our lives? Today is really kind of pulling out a chapter from the book that's specifically on investing. But I think that this is really going to be helpful for you. The first pillar of the intentional money method is clarity. And clarity is always going to be your starting point, right? But especially in moments like this. And here's what volatility does. Volatility, it creates noise. So everywhere you look, there's going to be headlines, there's going to be a hot take, there's going to be your brother-in-law texting you about what he heard on the news, right? And all of that noise makes it very hard to think clearly about your own specific situation. Okay. So the first question that I really want you to ask yourself is, do you actually know what you own? And do you know why you own it? No judgment whatsoever. Just ask yourself, do you actually know what you own and do you know why you own it? Not every ticker symbol specifically, not the exact percentage breakdown, just kind of the basics. All right. Do you know whether your investments are aligned with your timeline and your goals? Do you know if you are holding investments that you chose intentionally or ones that just kind of accumulated over time? And maybe now you're not too sure why certain investments are there, kind of how they fit into your overall portfolio. Because if you don't have clarity on that, that's when a market drop really can feel like a crisis, right? But if you have the clarity, that market drop is really just data. It's just information. It's maybe uncomfortable, might be uncomfortable data, but it's still just information, right? I had a client reach out this week, not in a panic, but with a really good question. And so I wanted to share that here. And she asked me, should I be doing anything right now? And the first thing that I asked her was not, well, what's the market doing? I asked, do we need to adjust our strategy? Has anything changed in your life? Is there anything that you know that you're going to need in the next 5 years, right? Making sure that we were really crystal clear on timeline and that nothing had changed in terms of her tolerance or capacity for risk, right? And in her case, nothing had changed. And that one question really completely reframed the whole conversation, right? Because if you don't need the money for 5 years or more, a short-term drop is really just noise, right? It's not a crisis. And clarity is what allows us to really to know the difference, right? So if you're watching this and maybe you're feeling a little bit of those market nerves right now, I want you to do one thing after this episode, and just one. I want you to go look at your accounts and ask yourself, do I know why I own what I own? Do I own, do I know why I own what I own? And if the answer is yes, fantastic. And if the answer is no, that is not a failure. Okay, again, just information. And it is a starting point for getting intentional, right? So if you don't really know, it's great information. Now we know that we can really start to get intentional. The second pillar of the intentional money method is values. And this one is so important when the market gets choppy. Okay. Here's the thing about a volatile market, it has a way of revealing whether your financial decisions were actually built on intention or whether they were built on potentially some financial fear. And there is a really big difference between those two things, right? When your portfolio is built around your actual values, around what really matters to you, your timeline, your goal, the life you're building, then a market dip just doesn't change any of that, right? Your values didn't change, your timeline didn't change, your goals didn't change. The numbers just got uncomfortable for a minute, right? But when your financial decisions were made from a place of fear, or because somebody told you something was hot, or because you were just following along without a clear reason, that is really when um, volatility can quite frankly feel existential, right? Because there is nothing grounding you. Values based investing isn't just a feel good concept, right? It's actually a risk management tool. So when you know why you own what you own and it connects back to something that actually matters to you, you are far, far, far less likely to make an impulsive decision that could be potentially an expensive decision. So the question for this pillar is your money still doing what you asked it to do? Not is it up or down this week, but is it still serving the purpose that you gave it? And if the answer is yes, hold steady, right? And if you're not sure, this is a great time to sit down with your advisor and make sure that you really know what does alignment look for like for you and make sure that you're getting yourself in alignment, right? As you join us, be sure to say hello. Let me know where you're watching from. I always like to know who's watching. And feel free to ask any questions along the way, please. So the third pillar is mindset. And I'm going to spend a little more time here because honestly, this is where people win or lose in a volatile market, not in what they buy or sell. Okay. This is where people win or lose, but not in what they buy or sell. It's how they think. Okay. And let me just say something plainly. The most expensive financial decisions I have ever seen were made in moments exactly like this one. Not because the market was in bad shape, because fear got in the investor's driver's seat. And so we want to make sure to keep fear out of the driver's seat, right? So I want to talk about the difference between facts and fear right now, because in all honesty, when we're talking about the stock market, we're talking about the headlines out there, a lot of that does start to get mixed up. Okay. Facts. Markets are volatile. They have always been volatile. There has never been a period in market history without periods of decline. And there has never been a period in market history where the market did not ultimately recover. Now, that is not blind optimism, right? That is the historical record. Now, we know that we cannot completely rely and assume that history is going to repeat itself, but we do have a lot of context to build off of, right? Fear says, this time is different, right? Fear says, I'm going to lose everything. I should have done something sooner. I'm behind now and I will never catch up, right? Fear says I should just cash out and wait until things settle down, right? I want to name a couple of things that happen in our brains when we are scared about money, okay? The first one is called catastrophizing. That's when your brain takes a real but manageable problem and inflates it into a worst case scenario situation, right? So, for example, a market drop becomes, I'm going to lose my house, right? A bad quarter becomes, I'll never be able to retire, right? The problem is real. The catastrophe is a story that your brain is really telling you and has created. Hi, Jennifer. Thanks for being here. The second one is recency bias. Okay. This is when we give way too much weight to what just happened and assumed it's going to keep happening. Okay. So when the market is down, our brain says it's going to keep going down. When it's up, our brain says it's going to keep going up. Neither is reliable. Okay. And the third one, and this one is sneaky, is the urge to just do something, anything, because doing nothing feels for a lot of us like not being in control, but investing, sometimes doing nothing is actually the right move. The most disciplined thing you can do is actually sit with the discomfort and not act from the fear. This is not about being passive. It's about being intentional, okay? And there is a big difference, right? Intentional investors are not the ones who react the fastest. They are the ones who respond from a place of clarity and purpose instead of from panic, right? So now we get into the tactical pillars, and those are strategy and action. And I'm combining them today because in a moment like this, they really do work together. So if you have a financial plan right now, I really want to encourage you to take this moment now to go back and take a look at it, not to change it, but to remember why you built it in the first place, right? A good financial plan is designed to survive market volatility. Let's say that again. A good financial plan is designed to survive market volatility. That's not an accident, right? That is part of the plan. It is the point. When we build a strategy together, we want to account for the fact that markets will go down. We expect that, right? We account for the fact that there will be years, not months, not weeks, years that could be very uncomfortable. And we build in asset allocation that reflects your actual risk tolerance in your actual timeline. And that's really critical. So the strategic question for this moment is, does my current allocation still reflect my tolerance for risk and for my timeline? And if the answer is yes, the strategy holds, right? And if something has genuinely changed in your life, a job change, maybe a major expense has come up, a health issue, a shift in your timeline for whatever reason, it's really important that you revisit the strategy, right? But the market itself going down, just that alone, is not a reason to change your strategy, okay? Chasing performance in up markets and fleeing in down markets is one of the most reliable ways to actually underperform over time. So staying the course when you have a real plan that's built on your values is almost always going to be the better move. Okay. And so what does intentional action look like right now from a practical standpoint? Well, if you are in accumulation mode, meaning you're still working, you're building wealth, keep investing. Keep investing consistently, right? A down market means you're actually buying at lower prices. It's actually a feature, right? So dollar cost averaging is really a great way to build wealth and just trust in that process, right? Now, if your portfolio has drifted out of your target allocation because certain assets dropped more than others, rebalancing might make a lot of sense, right? But that's a conversation to have with your advisor that's going to be based on your specific situation. There's no blanket rule when it comes to that. And if you're closer to or in retirement, make sure you're working with somebody who's really looking at structuring your income in a way that does not require you to sell investments at a loss to cover your living expenses, right? Sequence of returns is real. And that is exactly the kind of planning conversation that's important to have right now. So if you're really getting close to retirement, make sure that you're actively working with somebody so you can really feel confident in your income once you do retire. One thing I want you to take away from this section is your job right now is not to fix the market, right? You can't fix the market. Your job is to stay in the game, right? And we always want to, when we're staying in the game, making sure we're taking intentional action, not reactive action, right? And that really is, there's a whole chapter of the book. So I'll make sure to include a link to the book in the description here that goes over all of this. The chapter is really about building a strategy that you can stick to, but it's important to understand, your risk tolerance and be honest with yourself, right? And then that's going to help you to know what action makes sense, even when you're feeling a little bit scared, right? It's all in that chapter. So I encourage you to take a look at it. So the last pillar is support. And we talk about this one last on purpose because it really is the most underrated one. And I'm going to keep saying that, keep getting on my soapbox every day, but support truly is the most underrated pillar. The fact of the matter is that volatile markets can feel isolating. I genuinely believe that, right? People are watching their accounts in silence. Yes, we can have conversations with our clients about this. Maybe you're talking to a friend or a neighbor, but most people are looking at their accounts in silence and assuming that everybody else has it figured out. And for a lot of folks, they may be feeling embarrassed or scared to talk about what's actually going on for them financially. But here's the truth. This is an important truth. Almost nobody has it all figured out, okay? Almost nobody has it all figured out. What separates the people who come through these moments well from the ones who make very expensive mistakes is not superior financial intelligence. That's not what it is. It's the people they have around them, right? It's the advisor that picks up the phone. It's the community where they can say, hey, I'm feeling scared or I'm feeling uncomfortable. What do I do? It's the friend who says, hey, me too. Let's kind of work through and think through this together, right? Support is not about finding somebody who's just going to tell you what to do. Okay. That's not what we're talking about when we're talking about the intentional money method, right? Support is about not having to just white knuckle it alone. Okay. It's quite frankly a big part of why I built the Empowered Sisterhood, because I have watched women suffer financially in silence for far too long. And I wanted to create a space where money's talked about openly and honestly without judgment, right? Where you can say, hey, I'm freaking out about this. And somebody's going to say, I hear you and I see you. And here's what I know, right? So you don't have to go it alone. And if you've never had that kind of support, or you want that kind of support right now, I want you to find it. So whether that is the Empowered Sisterhood, or it's an advisor, or just having an honest conversation about money with somebody you trust, you deserve to have support. You don't have to do this alone, okay? Remember that the markets are going to do what the markets are going to do, right? Markets are volatile. It's uncomfortable. It's not the first time. It's not going to be the last time, right? But you have a method. You have a method that you can lean on, right? Clarity to really cut through the noise, values to truly keep you grounded in what matters, mindset to really make sure that you're separating the fear from the facts, right? Strategy that was built for times like this, action that is intentional, not reactive, and support so you just don't have to go through this alone, right? Those are the 6 pillars. It's one method. And honestly, it works in any market. Now, if today resonated with you, I do want to invite you, if you haven't taken a look at the book yet, it's called Intentional Money, The Modern Woman's Guide to Building Wealth, Purpose, and Peace. It just launched last week. Here's a copy of it. There's a Kindle version that you can get for Amazon as well. And, if you have been wanting a framework that you can actually use for your finances, one that was really designed with women in mind after decades of hearing people's stories and understanding how people think about money. And if you want to stay connected in a community where we talk about money like this all the time, you have tons of resources. You don't have to go through it alone. The Empowered Sisterhood is here for you, right? I'll include a link in the comments for that. I want to just thank you for being here with me today. I mean that. In a week like this, when people are feeling anxious, when people are feeling nervous, showing up and choosing to be intentional instead of reactive is everything. That's not a small thing, okay? So thank you again for being here, and I will see you next week.